regarding his closing message, I don't make money off my audience selling them courses. I do not need YouTube to.
Welcome back, folks. As you may have seen earlier, Chicken Genius commented in one of his earlier videos that unemployment rate spike was one of the best leading indicators of an upcoming recession. On that topic, meet Kevin, who is one of the best financial analysts out there on YouTube, clarified that the point Chicken Genius has pointed to was utter nonsense, and that unemployment rate was considered to be one of the best lagging indicators of a recession. Well, guess what? Chicken Genius didn't take the response from Kevin very well, and went on a rage against him in his latest video. Amongst other hilarious aspects of Chicken's video, he compared the dot-com crash to COVID crash, and called them both, in his words, pussy dips. Well, folks, just to put things into right perspective here, the Nasdaq crashed by around 80% during the dot-com crash, and took close to 15 years to recover back to the highs before the dot-com crash. Well, according to Chicken Genius, that is a pussy dip. Something investors shouldn't worry about. Anyways, we'll now look at what Chicken Genius had to say in response to Kevin.
I need to do a response video to meet Kevin, whom I always had his back, supported him for governor, supported him when the whole world turned on him and hated him. I went to the extent to ask him out for coffee after that shit video, since I'm in LA for a week, but there was no response. So since he wants to draw a line, fine. He talks about employment data, which is a lie. And it's a response to my video. Of course, I agree with his points, and he is absolutely right, and that's why his portfolio returns underperforms mine. My videos, I give you a simple summary, a short to the point video, because what people need is a direction. I only go into detail when I have to, and when I feel there's a need to. What people do not need is fucking confusion. Kevin sees short term and I see long term. And in his video, he goes on to prove that employment is a lagging indicator. Yeah, it's true. My grandmother can see that it's a lagging indicator. Again, short term, not to the point, and that's not what I'm trying to say. What I'm worried is about sustained recession, which we can't come back from. And not a pussy dip. If it's a dip like the dot-com or 08 or COVID, what's the problem? We all know with data that buying at the top versus timing the markets still wins. So when I share, I look far down the road. So here, let me explain in more detail. What makes me worried is employment going up, but the economy doesn't recover. Have you heard of it? And that is a big problem. If this happens in the States, I will sell and run. Macroeconomics is not so simple. So why do you think I try to explain the three different kinds of unemployment? There are many examples, but I'll go through the latest example of this happening in the world right now. Turkey. Unemployment is down, and in theory it's good, right? Companies are dying. Oh, but wow, how is this possible? I've been in America for a month, and most people here do not know how good they have it here. So Turkey, why unemployment is down? But in theory, companies should be hiring and earnings should be going up, right? The videos I do, I make it look simple for a very simple reason. Again, most people just need a direction, that's all. This will be the one and last video I do to explain myself. I'm not into YouTube politics. I do not like politics. I do such video. It's like a freaking waste of my time and frankly, stupid. And since he drew the line, fine, let me continue the line and add a wall to the line. Let me ask you about your experience in life. Have you seen people around working super hard but achieve a lot less than someone who practically sits on his ass? Everyone has the same access to 99% of the data. It's just a keyboard. Efficient market hypothesis. Hedge funds have access to way more data than retail. And I personally know hedge funds that pay private investigators to get data that we don't have. And yet, most hedge fund managers trail the index. Being smarter, more data doesn't get you ahead. Kevin is definitely smarter than me. But why does his returns underperform the index? What matters is connecting the dots better. So, regarding his closing message, I don't make money off my audience selling them courses. I do not need YouTube to make me millions. I share my trades, I donate my ad money to charity. And if you lose money, I will lose more because I do what I say and I show you transparently. Fame, money, what the fuck? My videos are 2 minutes twice a week. I don't sell shit and accept sponsors for a 200k YouTuber. I'm the poorest of them all. I got better things to do, but my mission is always above all else.
So when they say that a recession coming is most likely led by unemployment, I'm curious about this. So I think to myself, okay, well, I'm a numbers guy, okay? I like statistics and facts and logic. Unfortunately, those things are not extremely popular on YouTube, but that's okay. Let's go ahead and look at the chart and let's see if we can corroborate this thesis. So this here is a chart of our unemployment rate in the United States. The gray lines here are when there were recessions, and the spikes in the blue lines here are spikes in the unemployment rate. So let's go ahead and zoom into, let's say, 08. Obviously, the pandemic was a little interesting. We can zoom into the pandemic too. So it looks like we actually were in a recession while the unemployment rate was still 3.5%. Let me hide myself there. Look at this. We actually entered into a recession when we went from 3.5% to 4.4%. But we were almost done with the recession by the time the unemployment rate skyrocketed. Okay. What about 2008? Maybe that's an anomaly. Okay, 2008. Looks like the recession started technically over here in the early half of 2008. We had a stock market crash in September of 2008. The unemployment rate had gone from 5 to 6%. But wait a minute. It didn't actually skyrocket until the stock market, until beyond, like after, when the stock market already bottomed in the first portion of 2009. It looks like it actually peaked in October of 2009, well after the stock market had already substantially recovered. Here in the dot-com bubble, looks like the crash was really here end of 2000, 2001. Unemployment rate didn't really start going up until the end of 2001. This is interesting. It looks like the same that's true of the 2020 recession, the pandemic recession, the recession of 08, the dot-com bubble, the 1990s recession, the early 80s recession, the 70s recession, the well, we got that one, both of the recessions.
Donkey, donkey.